I'm going to Tuscaloosa this weekend again for the big game, LSU, Alabama, the night game again. So
Is that still
it'll
a
be
big
a
game?
real long day.
I feel like LSU's season's kind of falling apart.
Yeah, it
I
kind of
guess it's still a
has.
big rivalry.
Yeah, it is. And didn't they just fire their coach too, I think?
Yeah, I think was that
I think that was one of the
within the last couple
many
weeks.
coaches.
Yeah.
We'll see if we can
turn this into an SEC football
ESPN.
podcast.
Yeah. Well, we'll see if we can even watch ABC or ESPN this weekend if YouTube TV can get their contract sorted out.
That's one reason I haven't switched, because this happens like every couple of years. They drop some big network.
But I don't know who to be mad at. You know,
it's
all
like
the
Disney
stuff out
or
there,
YouTube, right?
All the stuff out there is like people who are compensated and paid by Disney or ESPN to say, you know, tell YouTube TV that you want your channels back. But I feel like both parties are probably equally as guilty with YouTube TV wanting X amount of dollars, Disney not wanting to pay X amount of dollars, or vice versa, whatever.
Yeah, right.
I feel like I went the YouTube TV direction like probably 4 or 5 years ago. Like cut the cord, the whole thing. And at that point in time, it was cheaper. I think it was like $45 at the time.
Oh yeah, it was.
Oh, when
like $40, and now I'm paying $90. And there's not been like that many extra channels added.
Well, I think back when it first came out, 2017, 2018, maybe, it was $34.99 was what it debuted.
That's crazy.
Its price at. And the reality is everybody, or a lot of consumers, you know, there's 100 channels on YouTube TV. How many channels do you watch? Probably like,
I'm realizing it's a lot of ESPN because I've had the TV
a lot
far less in the last week for sure. Like even last night, I was like maybe we should just cut the cord and like get rid of TV because
just go with like
I was like,
streaming.
this is kind of nice. We're not just like sitting here watching TV. And like I opened a book and was reading instead. And I was like, if I didn't have this, you could, I suppose, do an antenna and get like still get.
That's what Josh said. Yeah, last night we were talking about it.
Still get the big football games, like you're still going to get the Super Bowl and things like that. It's just you miss out on, I guess, some of the big college football games. So you could literally subscribe for like a month probably out of the year, and it would have you watching far less TV.
Yeah, like SEC Network. I'm sure that doesn't come across on.
No, that's like ESPN channel. Yeah, you'd get like, you know, all the local channels, and then there are more channels than you think there are.
Oh, for sure.
Yeah.
Well, what happened with me is I kept not wanting to cut the cord. I don't want to do it yet. I don't want to do it yet. And then all of a sudden these things kept getting more and more expensive. And then I was comparing, I was like, I'm basically still paying the same on cable than I would be going to these other services. And so I just never switched.
Yeah. Not much of a, from a financial, let's turn this into financial planning somehow. I feel like from a financial planning aspect and trying to save a buck.
Yeah, right.
Not much of a cost savings by cutting the cord, because most people end up with YouTube or Hulu, Netflix, HBO, maybe Disney,
Apple,
like you
Apple
end up
TV.
with
5 or 6 so many of them,
and you're spending $250 a month anyways. So it's like the cost savings isn't there as much as it was when these things first rolled out.
No,
I feel like if Comcast wouldn't be such a headache to deal with, it wouldn't have been as big of an issue to cut the cord. Like if it was, you know, I think the benefit of all these subscription services is it's a piece of cake to manage your subscription. And it's just, you deal with price increases, but you cancel it 1 month. Okay, no big deal. If you ever want to resubscribe, you resubscribe. Comcast, on the other hand, is a complicated nightmare to get the cable boxes, have cable hookups in your house. You want to cancel. It's a 2-year contract. And then at the end of the 2-year contract, there's that 1 month where they double the price of your agreement. So you have to talk to somebody in a foreign country to talk about lowering your bill again, sign up for another 3-year contract. It's just a disaster.
Welcome to the Retire While You Work podcast. I'm Myles Zuger, joined by Jeri Anne AG and Carson Odom on the team. And today, I'm going to quit griping about subscriptions and all the issues with them right now and flip it to charitable giving. It's that time of year, in the last couple months of the year here, where I think this starts to become a bigger focus for people, not only because it's the holiday season and they want to give and want to make it a priority, but also the tax benefits that can come with it. So it's something that we see a lot more clients doing come this time of year. And I think one of the reasons is because people just have some sort of an idea on where their tax picture might end up when it's January and February and you're cleaning up the end of the previous year. Maybe you're not sure where income's going to come in if you're self-employed or run your own business. But as you get to the last couple months of the year, I think you start to have a more predictable idea of where things are at. And so it starts to come into focus as more of a planning item for people this time of year.
And I think that, especially for, like, more like the retired people that are taking, distributions out of their IRAs and stuff are definitely seeing a big benefit for that because they can do the qualified charitable distributions from their IRAs, straight from their IRAs, and so I think a lot of people don't realize they can do that, until they get with a financial planner and they start telling them how those things work, but, I mean, I feel like people don't know they can go, straight out of their IRA to a charity and not pay taxes.
There was a big benefit for charitable giving prior to the tax changes in 2017, 2018, where it was much easier to itemize on your taxes. And if you itemize, that's where you get to count and add up all your charitable giving. Well, after those tax changes, now that standard deduction is doubled. So it's much, much, much more difficult to itemize and feel the benefit of your charitable giving on your taxes. There's obviously still a benefit. And I believe, don't quote me on the stat, but somewhere around 10% of people itemize. So it's very rare, honestly, for people to even itemize their deductions. So a lot of people aren't getting the tax benefit of contributing to charities. However, in 2026, they're changing that where, again, I don't have the exact number in front of me, but about $2,000 of charitable contributions, whether or not you itemize or not, you're going to get to deduct on your taxes. So they're bringing back the ability to deduct charitable contributions, which is largely beneficial for people who donate to charity, because over the past few years, most people probably aren't getting that charitable contribution deduction.
I think the standard deduction is up a little bit over 30,000 for a married
30 grand
filing jointly.
That's right. Next year, I think in 2026, it's crossing over $30,000.
And it's like
right.
around 16,000 for a single taxpayer.
Yeah.
What was it like? I don't know if it was a long time ago or if it's still that you could always like deduct like $500 or something without itemizing anything. Was that a thing at one point, or can you still do that?
I think that is for like if you're giving maybe some stuff like Goodwill and you want
You
to
think it's that
deduct
kind of
more than like
charity stuff,
5,000,
not like money donations?
You don't need to itemize on the receipt for that. You can kind of just like claim like a miscellaneous charitable deduction for those types of things without having to say, this dresser cost $100.
Yeah,
and
right,
these clothes
right,
add up to
right.
200 and do that. And then, but if you went over 500, I think you then had to
Have to
itemize
like
and turn that
itemize
in
what
with
it
your
is.
return.
Okay.
So
Yeah,
I think
knew there
that's
was
what that
something like that.
Yeah, I can't remember. But anyway, with the end of the year coming around, charitable contributions are calendar year basis. So you can't, wait until April when you're filing your tax return to do a prior year charitable contribution. It's got to be done in the current year. And there's going to be that added benefit next year with the tax changes, with being able to deduct that contribution. Or like Jeri Anne was talking about, there's something called QCDs, qualified charitable distributions out of your IRA, where instead of paying taxes on an IRA distribution, you get to lower that taxable amount by just directing an amount from your IRA directly to the charity. So that's when did QCDs come out? That's a relatively new tax change, right?
I think they've been around for a little while. I think that one of the bigger changes is that it's just it used to be tied more to the RMD age. So you still have to be
Right.
to be able to do that. You have to be at least age 70 and a half to make those as a QCD, which used to be the RMD age. The RMD age is now 73. So
it's weird they still have that age.
I know. So somebody still has to be age 70 and a half to be able to do the QCD, and they're limited up to $100,000 a year, I believe. I don't think that number has changed either. So, I mean, most people aren't given, the average person isn't given that much to charity, but still, I think even if you're not itemizing and you're pulling RMD, it is a way for you to, give a nominal amount more to that charity because you're able to not pay taxes on that or use those pre-tax dollars to give. So, I mean, the scenario is if somebody was given 10 grand to a charity and they took that distribution and then gave that cash, they're probably call it 20% taxes. They're only able to give $8,000, whereas they just give straight from the IRA. They're able to give the full 10 and save themselves $2,000 in taxes.
And then what about just gifting stock versus money, is that the same treatment?
If you're not 70 and a half and you can't do a QCD, you get the same tax benefit by gifting stock, except, if you're going to sit here, let's use an example, you're going to write a check for 10 grand, using cash in your bank to a charity, you'll get a $10,000 charitable deduction on your taxes. Or you can use highly appreciated stock or investments to donate and then turn around and buy that investment back. And you're essentially getting rid of the unrealized gain on your balance sheet or inside of your account. So it's just a way to, again, improve your tax situation long term, still get the charitable contribution. Just an idea. Or last idea is if you have a very high income tax year and you want to be charitable in the future, a donor advised fund is a great thing to set up so that you can get the charitable deduction in the year in which you give to the donor advised fund, but you're still in control of those monies. So you don't have to empty out the donor advised fund there's no end date. You could empty it out over the rest of your life if you wanted to. So
And the donor advised fund, the money is invested too. So it can still grow when it's in there waiting for you to donate somewhere over the years. So
Yeah, I think the biggest thing is if you're somebody who is charitably inclined and want to give, you should always just check with your financial planning team to make sure that you're doing it in the most optimal way, because there's not always opportunity. I mean, sometimes it's just you're giving to give and you're giving cash and there's not a whole lot of opportunity there. But a couple of these points here, there sometimes is some opportunity to, help yourself from a tax position even more than the gift you're giving by giving the appreciated stock and getting that out of your name, or doing a QCD so you're not realizing that income. The other idea is if you have stock at a loss, sometimes it makes sense to actually sell that first so you can realize the capital loss and maybe offset some other gains in your portfolio and then give that cash. We see clients, that's more of a rare one that we see, but if clients are trying to offset some other taxable gains across their portfolio, they maybe will do that at times.
And at Adams Wealth Partners, we also have a donor advised fund, and we like to donate to several causes around Nashville and well, around the country, really. But we focus on some here in Nashville. Do y'all want to talk about those a little bit?
yeah, we've got two especially that are coming up this week. So we're recording this on November 4th. We've got the two walks this upcoming Saturday, the Alzheimer's Association, as well as the Down Syndrome Association of Middle Tennessee. I know David's the Alzheimer's Association's close to his heart with his mom. And then my little brother, Corwin, has Down syndrome, and I joined the board probably a year and a half ago. And then Taylor's daughter, Meredith, also has Down syndrome. So those are probably two of the organizations we're closest with here, but both of them are having their fundraising walks and awareness walks this upcoming Saturday, November 8th. We've been posting a lot about it on all of our social channels, but those have been one way that we've been able to raise money and join together as a team for something that's close to us. We also support, Encora.
Encora, right? And
Yeah,
then
Hard of
Hard of
Hearing.
Hearing.
Yeah, which
That's
I'm a
right.
part of, where we help to provide hearing aids to young professionals. Just because they can be costly, there's no income threshold that people have to meet. We just are trying to help people reallocate some of their money. Or you be able
Yeah,
to
so
not
y'all are
not
both
have
on
to
the
use
board
their own money.
of
So yeah, I'm on the board for that, and it's a great cause that we have. We help out several young professionals a year with a set of hearing aids, and we cover a year's worth of appointments as well. Because the cost of that probably runs anywhere from $5,000 to $10,000 when people are first getting started with a set of hearing aids, and insurance doesn't often cover the cost of those, which most people don't realize either. It's usually on the it's a very, very necessary benefit for most people, but for whatever reason, insurance isn't. It's not at the top of their priority list. So it's a cool organization to be able to.
Yeah, I know. I've never understood that. My mother's worn hearing aids most of her adult life, and she's always like, got to fork out like $4,000 or whatever it is. She's always like, it seems like there's something always that she's having to get a new one or replace something, and it's so expensive.
Yeah, well, and they're so little that like they're
Oh,
easy
her
to break,
dog
or
has
you drop
eaten
it.
them
Your
before.
dog.
Yeah.
It's like the old excuse: your dog eats your homework. I guess dog
Yeah,
eats
no,
your homework.
literally. Yeah.
Um,
But I think that what else? Do we have any others organizations that we support? I feel like there are some that we're missing, but those are our big ones. Those
Mhm.
those kind of
yeah,
four,
Yeah, and
I
then Angel
think.
Trees, we get
Angel
we'll
Tree, right?
start
Salvation
that
Army.
process here. I think we always get about 20 or 25 angels that we as a team, as well as clients, help support
Which
around
is
Christmas.
the Salvation Army, where they help
Salvation.
Yeah.
help with gifts for families. I think
Yes.
ours is specifically in the Middle Tennessee area.
Yeah.
Yes,
Provide
it
gifts for
is.
Christmas so that everybody has a little something under the tree.
Yeah.
So yeah, if y'all want to donate, get an angel, come by the office and get one off the tree. If we still have any, actually, we're going to bring those to our client event on Thursday, so they might all be adopted. But
I can't believe that it's holiday season already. I don't know where
oh,
this
I
year's
know,
went.
I know. We say that every year.
Yeah, it sneaks up on you.
Sure does. Sure does. Well, cool. Well, that I think the summary of it this time of year, charitable giving is at the front of all of our minds. There's strategies that you can implement to make it the most tax effective. But give us a call, shoot us an email. We're happy to help see what strategy is going to be best for you in your personal financial situation. But we're always here to help. But otherwise, thanks for joining us on the Retire While You Work podcast, and we'll see you next week.
Thank you.
Thanks.
Any opinions are those of myself and not necessarily those of Raymond James. Expressions of opinion are as of this date and are subject to change without notice. The information contained in these podcasts do not purport to be a complete description of the securities market or developments referred to in this material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Every investor situation is unique, and you should consider your investment goals, risk tolerance, and time horizon before making any investment. Prior to making an investment decision, please consult with your financial advisor about your individual situation. Any hypothetical examples are for illustration purposes only. Actual investor results will vary. Raymond James does not provide legal or tax services. Please discuss these matters with the appropriate professional.